Okay, we should be live. Good evening, everyone. Hope you had a fantastic weekend. Any signs of life in the chat, as well as the basic audio video check, I'd be most grateful. And then we'll get straight into it. As usual, no shortage of things to talk about. Where is Don? Well, it's not Wednesday, so you'll have to wait just a couple more days to be with the duck. Hello to Andrew, Drexel, Daniel, 5, of course, Danny, Karnik Leon, probably butchered your name, Dixie, hope everyone's doing well. Xerox, is that an American British thing? Xerox and Xerox? I think we pronounce those things differently. Dumbo, of course. Familiar names, familiar faces. Fantastic. So first things first, thank you to Bybit for sponsoring Technical Roundup. Couldn't do it without them and are grateful for their support. Updated links to them and their current offerings can be found in the description below. Make sure to click those, check them out, and show them some love. I think for this week there's an update to the rewards hub. So if that sounds like your cup of tea, be sure to check it out. Another way to support us is the Technical Roundup newsletter, also sponsored by Bybit, no money required there, just link in the description for the newsletter. Comes out once per week. If you want to see the awful Frankenstein's monster that the duck and I can come up with on a weekly basis when both of our oversized, malformed heads clash together, that newsletter is the one for you. And perhaps conveniently, it also comes with all the TradingView links to our charts. So if you're not a fan of kind of following along as we cycle through and you just want the levels and no commentary, it's good for those purposes as well. And it's free, of course. Last little request from me. The support on the channel has been very humbling. Thank you very much for all the likes and subscriptions. Let's keep those up. Like the video if you haven't already. Subscribe to the channel. And more content will most certainly be coming your way. And thank you for all those who preemptively do those mundane yet important features for the channel. So, Monday markets. Let's talk about election week and just the market generally. So, as you'll be aware, and hopefully you've been watching the videos on the Technical Roundup YouTube channel, there was one about Bitcoin at 14k, and there was also one about just the monthly close generally in Bitcoin and Ethereum. So we'll be revisiting some of those topics as well as looking at some lower time frame stuff. Okay, so I don't normally pay attention to the quarterly time frame. I just haven't. The monthly is usually the highest I go, but in terms of representing the final boss area we're in terms of levels of resistance, I think the quarterly time frame does that reasonably well. And using the same logic as we use elsewhere of the highest close, we get pretty much that same level at 14k. I don't know why that's done that. We get the same level / area at 14k, and you can see that if the market breaks above here, there's really not much to go off or reverse from until all-time high. And that's both true in terms of the technicals, also the gentlemen who are much smarter than me and trade like volume profile and that type of stuff. For them, this is an area of thin air above 14k as well, and they're just, you know, swathes of emptiness should the market break significantly higher and find acceptance, right? Of course, the logical implication of that is that for sellers, or perhaps for anyone looking for mean reversion or bears or however you want to categorize this subgroup on the other side of the market, it's really the do or die / last stand, I always say that, last stand type of structure. Because if you don't hedge or sell or short or take profit or do whatever it is that you do around this area, there's really nowhere else to do it. And when the market reaches those types of extreme inflection points, I certainly try to do business in that direction, because it's very rare that you get such clear invalidation in terms of just overall structure at such high time frame levels in these instruments, right? The last time we really had something like that was down at 4,800 or thereabouts in terms of monthly structure, which was this area here. Sort of only consolidation before the all-time high gold rush, gets smacked both ways, and then of course this is the famous crash and we wick into it. I bought some at 4,800, soiled myself as I watched it go $1,000 lower, and then ultimately that was the bottom, which has led us to the reversal and to where we are right now. So for me, these areas just make sense, and I generally don't assume that they're broken until I have really good reason to believe they're broken, and I just like doing business at those key extremes or inflection points. A couple of other points on the monthly. So we talked about that quarterly structure. It's reasonably self-evident on the monthly time frame as well. Same type of highest close. And as per the video, and I recommend you go watch it if you haven't already, the monthly close was on top of / at structure. You'll see that other data feeds vary. And for example, Binance will have closed just on top of the level, so on and so forth. It doesn't really matter too much. As argued previously, when price closes at structure, or in the absence of a clear reason for thinking that it's definitely broken, like if you're sat there having to ask yourself, well, some of it closed above, some of it closed below, this exchange did that, this other exchange did that, the structure's probably intact, or at the very least it makes sense to be conservative and assume it's intact. So for me, the 14k area is still valid resistance until proven otherwise, and it derives, again for me, additional technical significance, because if it's not here that sellers want to step in, make a fight, or for this market to pull back, then there's really no other area, because then all that's left is all-time high. We just have an absolute absence of compelling technical structures if it's not here, and it's one of those if not here then nowhere scenarios, just like we had at the lows, at this monthly support. If that fails, then God knows there's no real support for me at these lows. So I bought some, so I'm essentially paying the same respect to monthly resistance that I paid to monthly support, and I generally don't think that's particularly unreasonable. Perhaps even looking at more recent price action, for newsletter readers and technical roundup watchers, it was very difficult to derive any type of bearish high time frame bias, because we were getting such clear evidence of support on the monthly time frame, right? Highest close 10.7, and we didn't get a single close below 10.7, so there was no real reason to turn bearish on the higher time frames. Yes, we had to deal with some uncomfortable wicks and price action below, but ultimately there was no fake out at structure. So again, nothing if not consistent. If we're going to pay attention to monthly support resistance flips, or monthly structure at 10.7, why not pay at least an equal amount of respect to monthly structure at 14k? I personally, despite how much I would benefit from just an all-time high teleport and all the things that come with it, I am not enthused by the complacency at such an important level, where there seems to be, again, in my echo chamber, self-selected circles, Twitter, whatever you want to call it, but certainly amongst market participants generally, consensus with regard to price just moving to all-time high, and that's it, and highest monthly close ever, etc., etc., just send the whole thing. There are definitely arguments for thinking that way. I just want to see a little bit more before I hop on board, given the tools that I use. Like, if I use technicals to act upon narratives, sentiment, etc., for the most part, and my high time frame, very unambiguous technicals don't align, then I have to at least be conservative, notwithstanding the fact of how much I would benefit from an all-time high run, as I'm sure we all would. Like, there is literally nowhere else on this chart, in terms of near current prices, that it makes sense, that it makes more sense to be conservative than where we are now. In my view, anyway. Does that make sense to anyone at all so far, just in terms of contextualizing where the market is? The whole now or never and technical significance of us having nothing really above us and all that type of stuff. If it doesn't, let me know. I can certainly try to paraphrase or clarify, but I just want to give some context with regard to where we are for me. Okay, awesome. So that's, yeah, the quarterly kind of shows that same level. There's really nothing if not here. The monthly, again, the only other thing I'll add is that there is by no means a guarantee, even if the idea is right. And again, timing is obviously key and often the most difficult thing. There's no guarantee that you get this, okay, close below resistance, then the market just tanks and nukes. It's certainly possible, and it wouldn't be left of field. But again, a lot of the time, high time frame reversals take longer to play out. So you could see, even if we just get a shallow pullback on the monthly time frame, you could see a candle that rallies, looks something like this, let's say halfway through the month, right? Flips the monthly open and starts looking positive. So maybe mid-November, we're somewhere up here, looking very good, looking very breakout-ish, and then miraculously, or not so miraculously, towards the end of the month, the price action that we had above monthly resistance ends up forming the high time frame wick, and we dip back below the candle open and end up trading lower. So that's something to be aware of. As price is trading around these levels, it's worth trying to have some sort of understanding of what type of high time frame candle is being formed, or where are we if we're considering the monthly candle. Are we in a zone where there could potentially be a wick forming, right? It's not always so straightforward that monthly resistance taps it once, goes to shit, easy trading. As we've seen at 10.7, again, we do have just recent evidence of monthly structure having credibility. You had to deal with monthly close above, another higher close on the monthly which retested it, a monthly which goes all the way down to 9.8, you know, almost $1,000 below the level and close on top of it before you finally get your high time frame move, right? So 2 full months and a number of weeks of price action before you get a simple support resistance flip, right? So 2.5 months for argument's sake. So in the same vein, I'm not going to burden this time frame with too many expectations to react immediately, right? Monthly close at resistance, and we are what? 2 days later, which is where we are in this candle right now. I'm not going to go all in and think, right, it has to nuke now, otherwise the idea is wrong, or it has to go up now, or otherwise my view is incorrect. As we've seen, even with relatively uncontentious and basic support resistance flips, we're dealing with months of price action here. So I don't want to be too stubborn and short-sighted when it comes to how this monthly candle and perhaps the next one will decide to form. I want to talk about the weekly time frame because I think it's some of the arguments made about resistance and weekly structure I've found to be quite unpersuasive, and then I'll get to some of the questions. So there's an argument floating around, or I've seen it made, that the weekly close isn't particularly compelling or indicative of anything, because we did essentially swing fail this high, which means traded above it, yet closed below it. And typically, although in crypto the reliability of this specific pattern is always debated, and it's not something I trade in a standalone matter at all, but I'm sure you've heard the term SFP, swing failure pattern, right? When you have a key swing point in a market, and the market trades through it and closes below it if it's a sign of reversal, or if you've got a swing low, right? Swing low, the market trades below it and then closes above it. That's supposed to be bullish, right? So an argument floating around is that, well, this isn't of a valid swing failure pattern, or it's not a compelling swing failure pattern because, you know, this high is insignificant, or some form or some way. Maybe the pattern is bad, whatever. In my view, it doesn't really matter whether this is like a valid swing failure pattern or not. I don't think 14K or this structure so far derives its significance from the swing high. For me, we're at weekly resistance rather than just a weekly swing point. So this swing high is a product of weekly resistance coming all the way back to this pre-breakdown range, right? Lowest close, highest close preceding the first real high time frame reversal. And for me, that's resistance, right, being retested. And this swing high is a product of that retest being resistance. So it's kind of it doesn't really matter whether it's like a valid SFP or is this swing high important, etc., etc. It's not that the market is just randomly poked above a swing high. I think the more useful, or for me, how I'm looking at this area is a test of the underside of this range rather than just picking out some wick and saying that wick is important. So there's kind of more to the picture, I think, than just isolating a random swing high. The only other thing I'll add on the weekly time frame, and it'll become slightly more apparent as we add our levels, is that as we discussed, when you had our 10.7, I don't know what that is, let's say that's somewhere around here, we had our 10.7 monthly level of support. Here you can see it was violated quite significantly on a weekly basis. I've droned on about this a million times. The low of this week comes out around, again, 9,600 or 9,700, which was almost $1,000 below. Oh, sorry, it's about 9,800 with support at 10.7, so like a $900 move below structure itself. So if we've seen meaningful violations of monthly support even on the weekly time frame, we need to be aware that even if we've got clear monthly resistance coming back to this 13.8, 14k level, it's definitely still on the table for the market to put in some sort of high time frame wick, just like it put in a wick here before giving the high time frame reaction that's expected at structure, right? So we were getting bullish monthly closes all the way up here. Then you got the high time frame wick, which made it look like it was all over, and then the high time frame move, right? So in a similar vein, one at least should be on guard or aware of a similar type of violation, whereby the market pushes up, puts in some sort of high time frame wick at this structure, and then offers the move from resistance, just like we got the wick and then the move from support, right? And that's where this pre-breakdown range becomes additionally useful, because using the lowest close and highest close and then a mid-range within the structure, those are going to be my reference points if the market starts rallying higher rather than fading structure just at the level. And the reason I say that is something that we'll talk about on daily and lower time frames, is that there's been no real breakdown in this market quite yet, right? In terms of meaningful high time frame structure, this thing has been really strong and everything's been intact for the most part. I mean, even just a zoomed out point of view, since from the point that we had the high time frame breakout and had our pullback that we talked about with that wick, market structure has been quite relentless, right? This is the first real breakdown on this leg, but then since then, the lows have been intact pretty perfectly, about as much as you could want from a trend, right? Lows, 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 lows. There's been no real interruption or kind of cascading, stop run, or any of that normal stuff. There's just been no daily signs of weakness yet. And I think the intraday time frame makes that point very clear as well, with regard to how strong and how prevalent market structure has been on the way up, right? Again, looking at the same area of price action, just on a slightly lower time frame, you've essentially got all the key lows holding as the market's creeping up. None of this kind of breakdown, reclaim, deviation scenarios, pretty much just straight higher lows. And this most recent leg down, despite coming from monthly resistance, I mean, just eyeballing this chart, where's the key shift in structure? It hasn't happened yet, right? There's no clear lower low or imbalance that jumps out, and that's definitely something to be cognizant of. That there's certainly a lot of history, and I don't know, something I tell Donald all the time is that market structure seldom lies. It's just a lot of the time you notice it when it's too late or after the fact. But looking at, again, the daily time frame and the intraday time frames, etc., if one is waiting to catch some sort of breakdown for this high time frame resistance level to play out, it still hasn't happened yet, in my view, right? And even on the bloody hourly time frame, very much the same picture of the lows holding intact and no massive alarm bells in terms of market structure quite yet. So that's definitely something to be aware of for over-eager bears. I'm sure a lot of the gentlemen and ladies, etc., selling this leg, which ended up being a higher low, or this leg, which ended up being a higher low, and we could potentially be in a similar scenario where you've got sign of impulsiveness at the downside, the very first kind of shift in lower time frame structure, and that's it. Oh my god, it's all over, even in the absence of market structure adding some context or confidence to that. So that's been really strong on the way up, and something that I would fade with great reluctance, if at all, right? So I think it's important now to talk about, well, what would a red flag look like? We're in an area of monthly resistance. We've kind of tapped it. We've had a daily close below. We've had a weekly close below. What would the shift in market structure actually look like? Or perhaps more succinctly, what would a breakdown actually look like? just as a kind of precursor to answering the question, whenever I've got the market at a key high time frame inflection point, like the monthly, where I expect that we could spend, again, months before getting a clear high time frame picture, I try not to develop any overly strong views on lower time frames, simply because they can serve to distract from the high time frame picture, which isn't invalidated until some other higher time frames fall into alignment. So in terms of a breakdown type of scenario, I think our previous requirements are still valid. So we've talked about the daily level. Cornholio says, so do you think the first major test of support and run below liquidity would be the start of the downtrend? No. I'm not sure what that question means. If you could rephrase, I can try to answer it. But I think it's one of those typical Cornholio tongue-in-cheek, like, oh, we're testing support, be bearish. But if I've misunderstood, let me know. We still have daily level, daily structure at 12.9. And if the market progresses a bit further in this range, we'll have confluence in the form of this nice channel that we've been trading and respecting quite well, certainly on the top side, as support resistance. And if we were to trade close to 12.9, at that point we have our first, or for me, the first significant daily level of support, as well as channel support. So any sort of breakdown trade, or for me, where a lower low would be significant. I mean, yes, early signs if 13.2 fails, the last kind of downswing before we made this higher high. If that fails, that'd be kind of a short-term red flag, but nothing, no strong views for me will be derived from that. But if we lose daily support, I think then I could start making case for continuation lower towards 12k. And again, we're dealing with monthly resistance. So if the monthly time frame is going to do its job, I generally expect lower time frame structures such as daily to eventually roll over unless the market's very, very bullish, right? So generally, I'm expecting some sort of continued chop consolidation, but maybe higher volatility, just given what's happening in the real world, between our high time frame structures at 13.8, 13.9. We've got the monthly open, the monthly level itself, etc., etc. And in terms of support, immediate support coming in at 13.2, kind of the last real low before the higher high, but untested or not so recently tested higher time frame support closer to 13k. So that could be what caps us for a while. If we've got a top in this market, like, if this is it, this is all we're going to get for a monthly retest, and the whole thesis about high time frame wick, etc., etc., is bollocks. What that would have to look like is something like the following. Yeah, I just wanted to get rid of that. Essentially, I would need the pre-breakdown structure to hold, and for the market to form some sort of lower high in that instance, right? So if we take the highest close as our breakout point, we have a bit of chop above below the level, but ultimately resolve to the downside. So for any type of short-term bearishness, or at least to be convinced that the top of the range is going to hold for a bit longer, any pushes into the highest close, I'd expect to find resistance, and then for us to continue that whole ranging scenario we talked about. Again, my ideas are generally predicated, at least in this instance, where the market is right now on the monthly. So intraday timeframes are going to be treated with less conviction generally. But if this thing is going to roll over, it definitely shouldn't be reclaiming kind of 13.8, 13.9, etc. As always, we can flip bullish and bearish setups around to get some sort of directional bias. I think we can just delineate this entire pre-breakdown structure using the lowest close and highest close here. Maybe a supply zone if you're inclined that way, etc. As we've talked about, market structure has been really strong, and early sellers or those joining on towards the tail end of an impulse leg have generally had quite a rough time in this trend. So if a similar scenario were to materialize, I think if bears lose, even just within this intraday range, forgetting the higher time frame stuff, if sellers lose the pre-breakdown structure and we get something like this, I think at that point the high is going to go and we have a higher time frame move towards, and this is where we can bring in our weekly levels. I think there's a lot of space if we break out here, surprise, surprise, at the weekly mid-range, which comes out at 15k, and then obviously the top of that weekly range towards 16k. And that's simply because I think, understandably, there'll be a lot of first time or kind of first test, best test sellers at monthly resistance, which lands at around 13.8, 14k. And I wouldn't be surprised if those early positions have an invalidation in the form of this high here. So being in that position, or, you know, anticipating what one would with such a position would, or how one would react to these circumstances. If you shorted monthly resistance and you've seen this breakdown structure, and you're probably risked, at least even on a short-term basis, if you're just fading this level at the high, any sort of push through structure that gets accepted, and the pre-breakdown consolidation, anything like this, at that point, you realize that you've probably shorted the higher low if you get the support resistance flip, and there's a good chance you're not going to want to take the full 1 hour loss at the swing high. And that would probably be plenty catalyst or impetus for any sort of squeeze towards those higher time frame weekly targets at 15 and maybe even higher at 16. Okay, that's the kind of shortest term analysis I think I can give. There's no real weakness quite yet. We've had the first sell-off from this monthly level, arguably the second one if you count this test here, but monthly resistance is doing its job. As a result, I expect for first-time sellers of monthly resistance, usually risk-defined around the area of the first test. In this case, it's quite nice because you've got a high, higher high, and then loss of the upper side of the channel and just short-term break in structure as well, right? So any of those early positions hoping to catch kind of the monthly wick and the high time frame move early probably won't want to see price above the monthly open. Okay. I'm just thinking if I've got anything else to offer in that regard. I think the only thing is that the channel is quite underrated. It is nice. Hold on, where is it? Yeah. I think this is where it comes from. Yeah. I think these are the anchors for it. I could be wrong. I think this is it. I'm not a huge diagonal guy, but if the market's going to start respecting structures which are reasonably self-evident on higher time frames, I'm going to do so as well, right? So while I'm waiting for my higher time frame perspective to either be fantastically invalidated or come to fruition, I'm more than happy to use these less common structures for shorter term trading, etc., etc. And now that we've kind of had the overextension above the top of the channel, support towards the bottom of the channel as well. I'm just kind of more muttering around this intraday stuff because I really don't have strong views. My interest is going to be on daily market structure to see if we're going to get any sort of shift, because a lot of these red candles on the way up have just been nothing more than pauses in trend. Okay. So yeah, I'm kind of tunnel visioned, if you will. Rob says this stream is shadow banned. What happened? Did it not come up in your home feed? That's unfortunate if that's the case. But yeah, long story short, let's summarize Bitcoin very quickly. Monthly, still at resistance, do or die level, 14k. If the market decides to do and push higher, I think any support resistance flip, which we'll define better on intraday timeframes, will likely take us to 15, 16 as respective trouble areas. I think that's less likely than a pullback, but something I'm ready for. Daily time frame and lower time frame market structure still very much intact. No lower low closes, no lower lows. Everything still looks very strong. So I'm not jumping on board any bearish setups at the moment because there's no breakdown to chase per se. Even looking at the market right now, hard to come up with an overtly bearish thesis unless you're betting on some sort of higher time frame unwinding. What would a bullish setup look like, at least in the short term? Well, we just formed a nice little consolidation from which we broke back into the channel, which looks something like the following, just boxing out the lowest close and highest close before this very recent lower low, right? So I expect that to be resistance, and there's a lot going on there in terms of the channel, monthly open, etc. So as a result, generally expecting a range until proven otherwise, because again, I'm very reluctant to fade such consistent market structure pretty much across all time frames. Okay, so in terms of catching a breakdown, that would need to happen through daily support at around 12 to 13k, and then look to sell either a momentum continuation or some sort of lower high towards 12k. The bullish setup, if we're going to go for those higher time frame wick areas, would probably look like a higher time frame push back above the monthly level and the monthly open. I would expect a lot of these first-time sellers to get nervous in that instance and puke. Okay, certainly seeing this entire thing retrace on them. Not the greatest sign for anyone in shorts near or with risk defined at those highs. As a result, pullbacks to the channel top, etc., etc. I'd expect to get bid and move into those more superior, higher time frame wick candidates. But with where we are right now, no real strong views until we either reach that retest level or reach lower towards where we can start discussing a real market structure shift. Does that make sense? And again, unfortunately, as with all of this, my views are subject to change. Like if I get something really good and risk defined to sell at 14 on some sort of retest, I might still take that, or something in the mid-range that looks good, that might present an opportunity. But, you know, I think we covered the big blocks there for the most part. I think the general kind of view or sentiment is that we're in an area of very high time frame, confluent, blah, blah, blah resistance, but there is just no evidence of weakness at the moment. And when there's no evidence of weakness at high time frame resistance, I either want like amazing entries at that high time frame resistance and then wait for the weakness to manifest, or get the backside entry with some sort of market structure break and then sell on momentum or sell on a lower high. This is the kind of hellish scenario where you haven't had the fantastic entry through like the wick through high time frame resistance to take a high conviction position, but at the same time there's no real backside or momentum to the downside signaling that, yeah, we hit the high time frame resistance, now we're going to top. So that's why I'm so that's why my views aren't held with enormous conviction with how the market's looking right now. Okay. Most of my focus will be on the monthly and weekly timeframes. Yeah. I mean, just look at this thing on the way up, right? It's been so good. It's been so good. And so many early shorts trying to sell levels on the way up as this thing is making higher lows. So, yeah. ETH. Again, I think the most compelling stuff comes from the monthly and, I mean, arguably the quarterly time frame. This is your kind of, just to make the same point, your retest on this time frame with support at around 300 is pretty much what the monthly time frame looks like as well, right? With pretty much the best level on the chart, as you've heard me say, I'm sure, a million times, the biggest SR flip, etc., etc. Close above, close below, and then retest as resistance, and nearest support, similar to the quarterly, the monthly level around 300. So until this higher time frame picture is fixed, I'm going to assume that rallies into resistance and higher are the high time frame wick, with a move towards 300 being more likely until proven otherwise. The weekly is looking better. The weekly looks kind of bounce-ish, which doesn't make things easy, as always, but, you know, we're not here for a... You know, that's just the price to pay, I suppose. Even just looking at the recent cluster, we've kind of re-entered the old range. If we take the lowest close and highest close before this nuke candle as our structure, you can see that we had a close back inside the range, and then the recent weekly tested the lower boundary of this cluster as well. So it's kind of in an area of support on the weekly time frame, despite the monthly looking like a dog's dinner. And again, ETH is one of those really nice market structure charts where you kind of have to either fade where you think the wick is going to be, simply in the absence of some sort of lower low type of thing going on. Again, just look at this thing, right? Lows creeping up, and then we recently had a breakout, so you've got a higher high as well, and then this pullback seems to be forming, or a candidate for a higher low as well. So no daily time frame weakness, and no kind of crazy mental rejection from these monthly levels quite yet. Hence the reasonable conservatism. And again, even with ETH BTC bouncing, which we'll discuss as well, for the most part, and this isn't perfect, kind of curve fitting to some extent, but since this impulsive leg, there's been no, consolidation, breakdown, right? This is the most bearish leg in the whole thing. Biggest drop, and then look since then, low, higher low, higher low, higher low, and then no breach of that yet. So that's why I'm conservative. The monthly time frame is saying alarm bells, but it's not trickling down, trickle down economics doesn't work, whatever. It hasn't trickled down to lower time frames yet. And when I'm bearish higher time frame with no lower time frame alignment, I either look to get the absolute best bloody entry possible on the higher time frame, where I'm literally either selling the wick or I'm super wrong, or I'll wait for at least the weekly or the daily to trickle down and show me some sort of weakness that my monthly idea is correct. And neither of those things has happened yet. Does that make sense to anybody with regard to ETH? Richard says yes. I tend to believe him. Yeah, Paul, alignment is the key. And if I don't have alignment, I better be getting a bloody good entry as the premium to pay for any sort of absence of alignment is how I'd probably describe it. And yeah, the same on the hourly time frame, right? All those things we talked about. This thing is just not rolling over at the moment. And that weekly level we talked about of being the kind of bottom of the cluster or the range, whatever, that's here right now. Yeah. On the daily time frame, someone asked about 382. I think we have this in the newsletter, this structure here, and it's really good, right? It's really good. That's probably a decent little level for shorter term directional bias. If that fails, probably move towards the lowest close, and then yeah, I honestly think if this level fails, there is some space to move down into the lowest close, and then something in this area, but I'm not really sure what. That could be the rollover trigger, given we've retested the monthly level here. But again, support holding, market structure intact, etc., etc., and that's on the daily time frame. Unless I'm selling the wick at the high time frame level, there's literally nothing else aligning with my idea of the market being at resistance, hence the conservatism. What if the monthly and daily says short and weekly says long? I mean, it depends what the chart looks like, but I'll typically sell something like that. Yeah. That's ETH. I think you can see like a common thread among all of this type of stuff, that the monthly time frame, the quarterly time frame, etc., all this really high time frame stuff, which can take months to play out, it kind of still looks like shit for me. At the very least, it's not screaming strength, because we have Bitcoin and ETH reach kind of do or die, now or never, really key levels, and they held. So that's generally suggestive of high time frame reversal. As we saw as recently as 10.7 on Bitcoin, those moves from those high time frame levels can literally take months, even if they're reasonably unambiguous with regard to their technicals. So high time frames generally pointing down / be conservative, resistance, whatever you want to call it, right? Lower time frames, the monthly, the weeklies, the dailies, the intradays, are showing basically this much alignment. 0, right? No alignment on any type of lower time frame stuff. And that's somewhat understandable because we just had the monthly close, which sets the bias. And as we saw recently, it can take 2 or 3 months before you actually get something which lines up. So if we get, or at the very least, when I get these sort of circumstances, whereby a really high time frame suggests direction, but even slightly lower time frames don't have any sort of alignment, my choices are essentially, 1, sell above high time frame resistance or below the high time frame support, or buy below the high time frame support, and basically go for the wick on the high time frame entry, right? So for example, the monthly Bitcoin support at 4,800, that would be the market falling to like 3,800, and me saying, right, that's probably the high time frame wick, or if my idea is any semblance of being correct, this is where the idea is best in terms of risk reward, even though in terms of probability, it's probably at its lowest because there's no evidence of alignment. So again, if really high time frame is showing evidence of direction, but there's no alignment even on slightly lower time frames, my choices are either play for the wick, which means selling way above the level or buying way below the level and just seeing what the fuck happens, or you essentially have to wait. It's the 2 W's, right? It's either the wick or you wait. And what do you wait for? You wait for alignment on at least one time frame lower. Or at least one of these lower time frames, sorry. So either some sort of evidence of weekly support being lost, weekly shift in market structure, weekly resistance, weekly weakness, whatever, and or the time frame in practical trading terms, which tends to put most of these things together, the daily shift in market structure coming from high time frame resistance. Where we are right now is we are neither somewhere where I can say, right, this is probably the wick part of the move and I'm going to sell up here because it just makes sense, my idea is anywhere near correct, but at the same time, there's no alignment to any of these time frames because we've seen that market structure looks fantastic and it's pretty much intact on all time frames. So we are here. If we rally, this comes into play. If we get some daily lower low closes, shifts in market structure, and then some subsequent rallies, we are in acting on this portion, on the alignment. Okay? But for now, we're stuck waiting for either wick or lower time frame alignment. That's kind of how I trade the real high time frame stuff. Give me an amazing entry so I can bet the farm, right? Or give me signs that my idea is correct. If you want to give me neither, I'm just going to trade the lower time frame conditions, you know, trade the channel, trade the range, whatever, but I won't be giving form to my high time frame view because there's nothing to go off of. So, or another way of looking at it, no evidence equals amazing entry required. Wick. Let me maybe like selling above R, buying below S. Right? So if there's no evidence, I need an amazing entry. So uncertainty is paid for with entry. Right? So if there's no evidence that my idea is correct, like monthly resistance, but weekly's bullish, daily's bullish, intraday's bullish, it all looks fucking great, I need to get an amazing entry to even justify fading something like that. Right? And that uncertainty or lack of alignment is paid for with what is a god tier entry if you're anywhere near correct. Okay? Or if evidence exists, price to pay is worse slash later entry. So that's basically the opposite, saying if I then get my weekly and daily alignment, there's a good chance that we got the high time frame wick somewhere around here, and I'm trading somewhere closer to here. And that sucks because I've already lost a big portion of the move, and the better trade was certainly up there, but because there was no evidence, I had to wait. And now that I've got some evidence and actually trade with higher certainty, higher probability, the price to pay for that alignment and for that certainty is getting a worse or later entry, which could, as always, squeeze and work against you and retest the high time frame level, etc. But this is just basically a balancing act. You can't have your cake and eat it for the most part, right? You're either stepping in front of this thing and saying, that's it, my high time frame view is correct, we're at resistance, we're above it right now, fuck it, it's the wick, I'm selling, because it just makes sense, a lot of sense to do so, despite the lower time frames not being aligned. Or you go the other way and say, it could be the top, could not be the top, whatever. If the evidence exists, if I do have alignment, I'm just going to take it and settle for the later entry. Does that make sense to anyone at all? Cornholio says, why isn't the 14 1k top enough for you to be a high time frame wick? It very well could be, is the answer. Very well could be. For me, it's not enough on two grounds. One is simple percentage terms, with regard to how much we violated monthly levels in other areas. And two is time. That's another reason why I don't think we're necessarily there yet. Because it's bloody early for that to be the mega high time frame wick, retest candle, whatever. So that's my answer to that. It could very well be, right? With election risks and COVID, winter, and all that shit, maybe the market just moves a lot quicker and respects resistance a lot more. And that's it. 14.1 is that wick of 13.8, $300 higher, and we just roll over. Could very well be the case. I've got reasons to not be entirely satisfied with that, / why is it not enough? Because the percentage move above monthly resistance isn't generally, is a bit too shallow than what I generally expect. And at the same time, in terms of time, it's the very next candle. It wouldn't be unreasonable for that to be a bit early, for that idea. Does this make sense to anyone with regard to the wick and the later entries and all that type of stuff? I'm just trying to kind of contextualize how I view these high time frame situations where it's really not easy. And it really isn't easy, right? Like, you'll recall, if I were to show you, like, you've never traded crypto before, right? Or maybe it is easy and we'll make it difficult, who knows, right? Let me just get rid of this. Like, someone just joins crypto and maybe they just learned TA, Murphy's book or whatever it is, and they just literally learned support resistance. And they come to you and they say, yeah, but look, there was like a super easy, straightforward support resistance flip on the monthly at 10.7, right? You had resistance, break, retest, move higher. So I assume you went all in long with your net worth when that happened, didn't you? And then you'll remember how grueling this was and how uncertain some of the, the weekly, we had like a weekly failed breakout at this point. You've got like a $2,000 range between the high of the retest candle and the low of the retest candle. Like, you had some absolutely doubt-inducing stuff go on during what seems like a basic A to B sort of move. So it always looks easier in hindsight, but when you're there trading like 2 months plus of price action, which really doesn't go anywhere, it's it's not as simple as it may seem. So yeah, that's Bitcoin. Talked about ETH. ETH BTC is kind of, I don't know. I didn't really have strong views on ETH BTC because if the market were bullish and ETH BTC looked technically bullish, that would just suggest a kind of risk on appetite within the crypto ecosystem. And to, your DeFi blue chips, whatever that means, and long ETH rather than Bitcoin, etc. But for me, it's a slightly tougher ask because the higher time frames look like crap. ETH BTC coming into an area of support isn't that significant because I still think if we get a high time frame correction, Bitcoin will be the flight to safety within crypto, and this will probably creep lower if that is the case. So technicals aside, if my high time frame view is even remotely correct with regard to some sort of pullback, I don't think ETH BTC coming into an area of support is going to be the most useful thing for me. Because I think that will be overridden by the fact that Bitcoin is still perceived as the safer asset in market corrections. So I'd expect it to outperform, in that case, dump less than ETH if we enter that sort of scenario. And I also don't like how there's a lot of front running at structure. I'm cognizant that you could just draw the wick as your previous range high being retested. But for me, I don't know, candle bodies just get tagged a shit ton. I mean, this is where we've got the market structure break here. And for me, whenever you just get this kind of close in an area of support but hasn't tapped the structure that I think is significant, it's not uncommon to see another leg down tapping previous week's low. All the comfortable long positions become significantly less comfortable. You get your high time frame wick a bit below the structure and then maybe form a base and do something. So yeah, that's ETH BTC. I don't have any bags beyond Bitcoin and ETH. Link market structure still looks good. Right? With the higher highs and higher lows. Low, high, lower high. Sorry, low. Higher low, higher high, higher low, higher high hits resistance. And now we are retesting the base of the previous higher high. This consolidation here. And it's at support. Again, from a market structure point of view, looks positive, looks fine, etc. But I always look at beyond just market structure. I want to see where the high probability, but also ideally the faster moving trades, right? And for me, we have an amazing structure at 12 and 13, which is this cluster prior to the all-time high breakout, which is now acting as resistance. So a flippity-doodah of that would probably be the most appealing trade for me technically, and there's a good chance that that goes to the pre-all-time high support resistance flip here, closer to about 17, and then just the high looks vulnerable at that point. But either way, no matter where you have your first trouble area assigned on this, it has to go through 13 for me to... That's probably the better trade on the table rather than the market structure setup per se. And again, there's just a lot more to capture from where the market... Even if we... Like, this is the low and you catch it to high time frame resistance, there's a lot more space through high time frame resistance until far less significant structure. But no red flags on Link USD quite yet. Link BTC looks worse for wear, to be honest. There is two reasons. One is the daily market structure is like the opposite. At the very least in the short term, you have a sequence of lower highs, and up until recently, you also had higher lows, so it's just like consolidation. Okay, but then in the last couple of days, no matter if you use the recent swing low or the one before that, we just use the lowest close here. You had a move below that, so a break in market structure, in shorter term or intermediate term market structure to the downside, which kind of sucks. So I'd expect rallies towards the high, should they occur, to get sold, right? Lower low into some sort of lower high in this region. More importantly than that, the weekly close was kind of trashy. You'll recall that with Link, and there's actually a whole Link video on the YouTube channel, so make sure to go check that out. It's a pre-recorded one. Generally likes to deal, because of how aggressively it trended, a lot of the structures we have to deal with are impulse, consolidation, impulse, consolidation, impulse, consolidation, etc. And we derive our SR from the consolidation phases between those impulses, right? If we delineate one such structure, and again, when doing that, we normally just pay attention to the highest close and the lowest close, rather than just the whole box being support and resistance. That ends up being your range, right? Support resistance, like top and bottom, pretty much. So using that for this, impulse, consolidate, impulse seems to match that set of criteria quite nicely. And then if we delineate the range with levels, so highest close and then lowest close, if we look at our weekly closes, we had the upper boundary acting as support for like, what, 1, 2, 3, 4, well, whatever, 6 weeks, just pretty much consolidated and formed a mini range between this level and then where the first bounce from that level topped out. So that's not a great sign, right? When you have weekly bounces from support, just doing this and getting stuck at lower time frame trouble areas. And then most recently, we had our first close below that structure. So generally, no matter if it's just straight continuation or it's the daily rally into a lower high that takes it there, I think given we closed, let me just clean this up a bit. Given we closed below the upper boundary of a support that we held for whatever, 5-6 weeks, it's likely or reasonable for price to reach towards from the upper boundary to the lower boundary. That's my first trouble area. If that's not enough for Link Marines to get interested, I think it's very likely that we go for our big boy macro uptrend super breakout retest levels closer to 50s. Okay, I still think level to level for now until we reach kind of the bet on the trend level on the weekly. Close below the range high. Generally, I expect us to move towards the range low, but could, of course, as we discussed on the daily time frame, rally during that time before finding resistance and moving lower. But yeah, not great. Weekly close bad. I think we move towards the bottom of the range. We looked at Link USD, Sushi Lover. YFI, I mean, yeah, not much going on. It's slowing down a little bit, but it's in the middle of nowhere. I agree that you can make an argument, like on lower time frames, that there's something going on around. So you have this impulse move, and then this is kind of the first base formed here, which is where the market bounced initially. But for me, that's just far more reaching and far less persuasive than the daily structure at 12,380 and 15,1, and pretty much just lost support. So to get bullish this, I mean, if you're very aggressive, I think there's a range play from the reclaim of the lower boundary into the upper boundary, right? Whatever, something like this. That would make sense. I think if you're more conservative and want to trade space, we can delineate this highest close, or just the level itself, but again, what I'm referring to is this highest close here, which kind of in line with the level anyway. This was the highest close, or the swing, right? Swing, up, or the upswing, which preceded the break in market structure, right? Lower low, and took price through a key daily level, so there's a lot going on there. So that's expected to act as resistance. If it doesn't, there's probably a lot of upside to capture from 15.1 all the way to 22s, which is this previous range. Okay, but in the absence of number go up, at least convincingly through 12,380, but I think more persuasively through 15.1. At the time, you know, for now, this is just closed below all relevant supports and is kind of just moving sideways for now. Not really interesting at all. And I think it's a reasonable requirement to demand this from a lot of altcoins that, hey, high time frame market structure is bearish. You've just been losing supports on the way down. No one gives a crap. So until that changes, there's no point in trying to knife catch. I think Bitcoin and ETH are difficult and precarious enough with regard to where they are on a high time frame basis that you don't need to give yourself the additional burden of trying to knife catch a bunch of altcoins on top of that. Generally, as long as resistance holds in this range, this is the next high time frame structure down here that's relevant, which may not seem terribly far, but purely in percentage terms from now, that's another 40-50%. Okay. So for longs, give me something, a show of strength that actually goes somewhere, something like this, from 15 to 22, plenty of upside, roughly, I mean 40% to be captured there, fantastic. There's probably some intraday trading that's totally appropriate within this range at the moment, but in the absence of some sort of event which looks like this, I think drift lower is more probable. But who knows? Who knows with DeFi, in terms of, other important markets, the S&P, I mean, we've got election results coming up, or at the very least, election results day. There are some reasonably worrying but compelling arguments about contested results and invoking the judiciary and, I don't know, election interference. And perhaps as someone who's from Russia, maybe I shouldn't speak on American elections so I don't get shadow banned or something. But certainly plenty of catalysts available for this market in the coming week. Purely technically, which may be invalidated or not relevant at all, we're still within this weekly range, derived from the pre-corona breakdown, highest close and lowest close, as well as I think this is like some sort of quarterly level I've got here, I don't quite remember, but this traded quite nicely, found resistance at first on the all-time highest close here, and then really the daily price action within this range has been fairly decent. Didn't really catch a bid in the range high, closed straight through the midpoint of the range, found perfect resistance at the midpoint, and I think this is our range for now. We've got the bottom and support at 3200s, 3230s, sorry, 3220s, 3230s, okay, confluence of high time frame levels there, and then immediate resistance is the lost midpoint of the range at 3300s. I think honestly with all the election stuff coming up, it'll just be more interesting to watch this as a, with some popcorn as the state results start to filter in. I'm not sure trading on election day or around election time, I certainly don't have an edge in this market, certainly in those circumstances. If you do, more power to you. That's most of it. I think any strong views, again, for me will be derived on monthly, weekly timeframes as bread and butter. If there are going to be any cracks in the armor, they'll have to manifest at least on the daily time frame for me to get interested. But for now, the summary for both Bitcoin and ETH, as simple as I can make it, is that high time frame resistance is intact. But at the moment, there is zero evidence of the market rolling over from those resistance levels. And that evidence could take, potentially, months to materialize, just like support at 10.7 took months to materialize. Given those circumstances of an existing high time frame bias, but without existing alignment on lower time frames, I will generally trade between intraday levels if there's something clear or available, or wait for evidence of alignment to come together if I want a backside entry, or some sort of crazy wick through structure if I want the riskier entry. Unsurprisingly, the monthly close is just like a day ago, and we have precedent for the monthly close taking 2+ months to play out, so you might have to wait a little bit longer for really strong views for me on this topic, unless this whole thing just rolls over and takes a shit. Any questions? Anything you guys want to talk about or want me to cover? Or let me just open a window while you guys let me know. Looks like that was reasonably well understood. I do recommend you go to my channel and watch the video on timeframes. I talk about alignment there a lot, and it's a real key part of my trading system generally. And I try to kind of explain aspects of it in passing. I don't always do an amazing job, but that video is kind of foundational and will certainly do a lot of the heavy lifting for me. But it's kind of like a balance of evidence, right? No matter what you might read or think, there's always a balancing act. You're either entering what's going to be an amazing entry with very little confirmation. So the risk is that you're wrong, but the reward is a fantastic entry which likely never gets revisited. Or you flip the odds and you enter with quote-unquote more evidence and confirmation, or that alignment, but the price to pay is a worse entry which may retrace significantly against you before maybe moving in your favor. And I'm not saying it's either or necessarily, but those are the competing considerations for the most part when doing business as a technical trader, in my view anyway. There are exceptions, blah, 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 but for the most part, that is a balancing act that you'll have to deal with. Just as an example, we'll do a final diagram for those who haven't clicked off yet. An example of that point. Let's say you have a level of support. Here. This is some sort of support structure that you want to buy. Okay, the time frame doesn't really matter. We're just talking concepts here. And then above that, before breaking down, the market formed another level of support. And we're going to kind of make that a dotted level of support here, which isn't as good, right? So you've got two levels. Here and here. And price does something like this, you know, it's bounced a little bit from support and then broke down, and it's now reaching this key level here. Okay? So immediately you can start to think, this is the support structure, this is the first trouble area. And what we have as a spectrum is alignment, confirmation, evidence, proof, whatever you want to call it. Right? And then you've got two sides of it. Little, lot. This is really rudimentary. When the market flies into this level, and maybe even starts wicking below it, right? Let's say this is what the candle looks like before the hourly close. And you get long in this area. No candle close, none of it. You just get long in this area. You know this is support. You know that support resistance isn't perfect, and you'll have wicks below and all that type of stuff. Okay? And you see this as a good entry at structure that you're planning to buy anyways. So where are you on the spectrum? You've got very little evidence of this thing acting as support. But what's the benefit is that your risk reward is fantastic. And in terms of your invalidation, it's really bloody close. Because this is one of those entries that if this isn't the bottom or somewhere close, then I don't want to be in this trade. So also, another benefit ends up being time, right? Invalidation and time are very closely linked. Good. Okay, so if you enter here and your first trouble area is here, even if you're a little bit right, and the market creeps up to, let's say, this level before even reaching resistance, you've already captured this entire move. And you're managing the trade from a much stronger position. So that's your kind of, I guess, management is another benefit, right? Management. Although some would disagree. So you get all these dividends and benefits from taking that entry at support, which perhaps others would take later or kind of follow up with. Of course, the risk of doing that is that you're buying down here, this candle could end up looking like that. Okay, and that I'm not going to go into the same type of list, but the risk of that is very much self-explanatory. Let's go to the other extreme, the other side of the spectrum, of a lot, right? You've got a lot of proof. What would that look like? Well, we know that this is our FTA, right? First trouble area. And so confirmation of this support holding would be this resistance breaking, right? I think that generally sounds to scrutiny, that what's good evidence of support holding? A break of nearby FTA resistance is good evidence of support holding. So in that case, you are entering on something like this here. Okay? So at that point, we are way here on the spectrum, right? If we kind of break this up a little bit. You're way over here if you're entering here at the break of FTA. And of course, the benefit of doing so, sometimes it's better risk defined, right? Either at the low or within structure itself. and you know there's certainly a lot more evidence and alignment that your idea is correct, but the price to pay is that, for example, the majority of the move was actually from A to B, and you're entering at the tail end of a shorter or lower time frame trend. So that sucks. Okay. In terms of risk reward, for the most part, there's usually an inferior setup if you're entering with confirmation. It's basically a lot of the opposite of the stuff that we discussed here. Trade management tends to be harder because you have to, for the most part, be comfortable or not terribly alien to the fact that the market could float back to support. And a lot of the time it becomes hard to stop out or put a nice risk-defined parameter on trades like these, because you'll either have something really tight at FTA as your invalidation, which isn't great, or you're stopping out somewhere between FTA and support, if not at support itself, which sucks as well. The details really don't matter too much, but I just wanted to really get across the idea of alignment and doing business at structure versus away from structure, and generally as a technical trader, the type of balancing we have to do and what we have to consider. Am I gonna buy this support that everyone wants to buy, but when nobody wants to buy it? Or am I gonna wait for confirmation and get on board later and pay the price in terms of a inferior entry, maybe the leg is over, risk reward, etc, etc. But anyone that tries to tell you that like there's a perfect system which always gives you confirmation, an amazing entry, no retrace, etc, probably not terribly accurate. And it kind of comes down to you where you lie in this spectrum, or perhaps more specifically where a certain strategy rests within this spectrum as well. Does that make sense? Was that helpful at all? Or shed some light on the rambling nonsense from earlier? So an example in the current chart would be, let's say, I don't know, the market pushes up above this swing high. At that point, this is kind of those high time frame wick entry candidates. Yes, I mean 15k as well, but just to give it some recency. Let's say the market starts really pushing through and you get some sort of short signal from the tape or momentum or whatever it is. Taking the trade here is very much one of those wick but very little evidence that I'm correct entries. Whereas taking the trade here is pretty much on the other side of it. It's already wicked, it's done all its stuff, there's already been like a, you know, 5-10% move between the high and where you're getting involved, but probability is more on your side, and you want to catch some meat on that move. So a lot of the time, if you look at how Donald trades, and you may disagree with me, you will very, very, very rarely, at least on Bitcoin, see that the duck trades the backside of the move, right? So the backside of the move would be, for example, you get some sort of push, and then it falls back, and then it does the pullback, and then another push. So like this would be, for example, a backside entry, or something like within this leg would be a backside entry. How many times have you seen the duck take any of those sorts of trades? He just doesn't fucking do it. He is like the wick person. That's why I always make fun of him when he says, yeah, I kind of shorted here and whatever closed here. I make fun of him, but that's more or less how his trading style works. He's just on the very extreme side of that spectrum, where he's really getting in at the do or die now or never extremes, and he's either very right very quickly or he's wrong. But even if he's slightly right, that can still let him exit in profit or a break even, whatever. Do you know what I mean? Well, that's all I've got. I'm going to stop rambling now. Thank you as always for hanging out on Monday Markets. Hope that was useful, or you learned something in an hour of 14 minutes of rambling. Like the video if you did. Even if you didn't like the video, that would be particularly kind gesture. Thank you to Bybit for sponsoring Technical Roundup. Their links are available in the description below with some recent Rewards Hub updates. And also the newsletter, Technical Roundup, comes out tomorrow at 8 p.m. UTC. So if you want the brainchild of myself and Donald, all, you know, just the levels, the charts, the analysis, no squiggly line, paint, trade theory nonsense, do sign up to that. It's free, and we'd love to have you on our non-spamming, GDPR compliant mailing list. Thank you very much for your time. and I will see you on Friday. Take care. Bye-bye.